So it's kind of speculated last week, right? We can see now that the S&P definitely ran up to its 200-day moving average. So the bright blue line is the 200, and man, we like hit that to the T, which is kind of, I think, surprising for the futures market. Because the futures market is always slightly hedging the true index price. But, sometimes you do get those exact hits there. And definitely today is a clear bounce off of that 200-day moving average. And, looking at the Dow, there's a good typical example. So the Dow did run past its 200-day moving average by a little bit. And now we're bouncing, basically, the S&P and Dow pretty much move in sync there. So, and also the NASDAQ as well. Kind of surprisingly, it bounced off of its 200-day almost exactly as well. At least it looks pretty exact on this shrunken chart here, right? This small chart. So probably, if the market moves in perfect behavior, it's a good chance it's going to come down here. We can see that the 30-day is the brighter blue, and the 50-day, they're kind of converging on the S&P and on the Dow, and they're almost there on the NASDAQ. So, there's a good chance that we'll probably come down to those two moving averages somewhere before going higher, if the market can truly go higher, with, considering now today we have concerns over global recession, or at least a global slowdown. The China talks, and seems that the Fed isn't in the forefront, but the Fed is always in the background. So, now we got three things kind of worrying the market. So who knows? We may not bounce off of the 30 and 50 here to go higher. We may just consolidate in this range here for who knows, maybe another year or so. If you look at this bigger picture, 2018 definitely looks like a bit of consolidation period. So we might get another year of it. If history is any guide to the future, if we look back a couple years, we can see from 2014 to 16, we kind of were in this consolidation. The bigger picture, obviously from 14 on up, there was a good run higher in the markets. But overall, we can see in hindsight that it looked like a bit of a consolidation. So it's definitely very reasonable that we might experience the same kind of, bigger trend consolidation, for another 2 years, until we get a better handle on, what's going on with China trade and the bigger global economy, markets in general. All right. So the short version is kind of expect a little pullback to this 30 and 50-day consolidation area here of the two moving averages. So, and also we can see kind of like my little light dashed support resistance line here. Markets definitely have touched upon it several times. So it's another good, and it correlates. It's lining up with the 30 and the 50-day. At least on the S&P it is. Not so much on the Dow. A little bit. It's a little below on the NASDAQ here, but again, this is close enough for markets, right? So so we got this, three support kind of items here for the market to kind of head a goal. I guess you could call it a goal for the markets to head towards, and for the machines to read as possibly a good place to bounce, or at least stop the sell-off. So.